Hey guys, Ridge Trader here, and today I'm just going to go over a quick video on how you can use the new week opening gap. Um, just a super simple way that you can use it to derive bias and just kind of trade off of it in general. So first things first, as you see ICT and a lot of other traders out there really have made the new week opening gap a pretty popular tool, but I know a lot of you guys out there just don't really know how to use it, why, when to use it, kind of just things like that. So the most simple way to explain it is you can just think of the new week opening gap as um, supply and demand zones, if you will, right? Just kind of support and resistance. A lot of times when you reapproach old new week opening gaps from the upside, you'll see projections like this, right? Like this, and then same thing from here. As we come down to other ones, you can oftentimes see them bounce up like this. So how do you trade it? So every time I mark my new week opening gaps, I'm gonna always put in the high of the new week opening gap, the low, and then the CE, the consequent encroachment. So basically just the midpoint, right? And you'll see here why I do that, because for this new week opening gap, you can see as you come down, we start bouncing off the low, come up, we bounce off the highs, bounce off the midpoint many times, and then we get the impulsive move out of the cannon straight up just before market open, right? So 7 a.m. market opens at 9:30, right? And then it takes off. So how could you trade this, right? So let's hop into a little bit higher time frame just so we can get a better grasp of what's going on here. So after this rejection here, we see that we start to create a base, lots of accumulation down here, right? So what am I looking for in this case? This overnight session here is basically just priming us for the New York Open, right? So what I'm looking for is a push over this high to give me that market structure shift, right? And once this happens, that's when I know it's go time, and I can start looking for a purge of this liquidity up here, right? We get decent, evident displacement over this high here, giving us that market structure shift. And now I'm looking for my entry. So now let's plop in our 30-minute fair value gap here. And then let's hop into some smaller time frames, right? MSS, big push up, looking for buy side liquidity over here, okay? Next thing is we're going to take the Fibonacci tool, right? Going from the bottom of the move to the top of the move, okay? And you can see that this comes at the 79 fib. Usually for my entries, I'm looking for somewhere between here and here for my entries, right? This is kind of the best, typically the best area you're gonna find entries for these kind of trades. The next thing I'm gonna look for is inverse FVGs, right? So here you can see we have this inverse FVG, and this is going to act very similar to a breaker block, right? So instead of it being a failed order block, it's a failed bearish FVG that gets broken through, and then as you come back down, it bounces to the upside. So these are just going to be my higher time frame POIs, so points of interest, right? Just kind of what I'm looking for. If this is to stay bullish, I want these to hold. I want these to remain intact. So, we can wick under, stuff like that, but I want to see this hold for the next move up. This doesn't necessarily mean I'm just going to take a blind entry at this area here, because I want to see the 1 minute chart give me a good entry, right? So here I hop into the 1 minute chart, and you can see we get that push off of these lows here, right? And we see this FVG here. It does wick under a little bit, but that's okay. This would be an extremely aggressive entry. Personally, not something I would want to take. right? Because you still don't know that this is going to hold. There's nothing that says there's no break in structure. We do have a little bit of purge above this FVG, but there's nothing super giving me super high confidence that this is going to hold. So the real entry is what I'm looking for here is this high here. We see this internal market structure shift, okay, off of this high time frame POI, higher time frame POI. We're in this discount, right? We're still in the discount. And then we have, let's see if the 3-minute offers a better viewpoint. Yes, beautiful. So now we have this 3-minute FVG here, absolutely beautifully holds. Okay, let's hop it back into the 1 minute here. So 3-minute FVG is obviously this 1 minute FVG here, right? The reason a lot of times I'll use the 3-minute FVG instead of the 1 minute is if I see things like this where we get this energetic push on the 1 minute chart and we have this FVG, we have a little one here and another little one here. Instead of using like 3 smaller FVGs, sometimes if you go to the next higher time frame, it'll just kind of consolidate all those FVGs into one, and that's just easier to look for and just kind of chart in your marketing chart instead of using like 4 different little boxes. You can use one, and it gives you kind of a bigger point of view. You don't need to sit around charting 1,000 FVGs. So that's just a little tip. If you see like 3 in a row, stuff like this, this is a good 1 minute FVG, but on pushes like this and this here, a lot of times it's best to just go to the 3-minute or the 5-minute, depending on what it looks like. This one right here, instead, I would never mark, FVG, FVG, FVG. Go to the 5-minute chart, see if this is just one 5-minute FVG. Okay. To bring it back to what we're actually talking about, we have this 3-minute FVG. We also have this beautiful order block here, right? This is a nice order block. So let's review. We have the push down into the new week opening gap. We get a bounce, right? Energetic move up. We have this market structure shift over this high, displacement over the high. We come back into the discount, right? We bounce off of these high time frame POIs that I'm looking for. Then we get a market structure shift in the 1-minute chart, and we get a retracement down to the 3-minute FVG here, which is going to be the entry, right? This is what you're entering off of. And then you have additional support at this bullish order block. So I'd be taking my long position kind of in the middle of this FVG, and then putting your stop loss at the bottom of this here, as it should not come back down into this. It should not break this order block. So you can put it just underneath that order block. And what are we targeting? Highs up here are the main target, right? 5-minute chart. This is a high confluence trade because of all those things I just spoke about. We have the high time frame POI, the MSS, the draw to liquidity, yada yada yada. So that's going to be kind of the main target. However, I do like to preach the idea of taking partials. So the first partial, if you did want to enter this, would be this high up here. We have a lot of stacked highs here. You can see this high, this high, this high, right? Comes back up, it creates a new high here. So this could be the first good area for take some partials, and then this is kind of your main target up here. And I'm sure if we get to even higher time frame, we can find additional areas of liquidity up here, but that's a little bit, too ambitious for my types of trading. I like to keep my targets relatively conservative. Just the kind of trader I am. I don't like to stay in trades too long. This is going to be the main target I'd probably look for off of a super high confluence trade, right? We have pretty much everything that checks my box personally, right? POI, high time frame POI. We have the market structure shift, buy side, clear buy side liquidity, draw liquidity is up there, pretty obvious. Then we have the market structure shift for the smaller time frame. Additionally, we get the retracement into a nice 3-minute fair value gap. We have the order block just underneath it, in case it does continue down a little bit further down, which is very possible that it could do. And that also gives us a very good 3-to-1 restored and a 2.4 restored or 2.2 restored for the internal liquidity. Hopefully that all makes sense. If this video helped you, please feel free to leave a like, and I'll see you in the next one.